I'm Brendan Yurik, CEO of Electric Royalties, mining royalty company really set to take advantage of the transition to clean energy by buying royalties on the mines that are going to supply the metals required for a clean energy future. So we've got a portfolio of 18 royalties to date. Been public for a little bit over a year and a half now. About $2 million cash in the bank, and no debt. Very tight shareholder group, and promising 2022 ahead.
Well, the thesis and the thematic is still holding strong for you guys by the sounds of it, looking at the number of press releases on the deals that you're doing. It's possibly your only defense from gold royalties, who seem to be snapping up everyone in the market at the moment.
Yeah, well, I think their name's probably going to preclude them from us for a little bit. But no, it's exciting. You know, I was checking into it just in the last month for just kind of interest. But over the last 10-year period, if you look at the annual price returns for gold, you know, the max annually was 25%. And you look at just this year, you know, we're right now heavy lithium in our portfolio. Lithium prices were up 400% last year, right? Tin prices are up 100%. Cobalt prices were up 75%. You know, so the price upside is, I think it's a bit of a different beast than you might see, you know, in the precious metal space.
It is indeed. In fact, you know, I think what I want to get out today, if I can, Brendan, is to just try and understand where this thing's going. Obviously, we were there, you know, the early days when you just started off, did a few deals which kind of people were looking at, well, that's sort of interesting structuring there, but a lot more kind of conventional deals now. But the kind of headline which kind of popped out at me was the first royalty cash flow. Not a big number, but the point is it started, right?
Yeah, well, and that one, exactly. And the first one's a tough one to get. You know, I think we were very creative in how we financed that to minimize dilution. You know, really let us go after a first tier asset. As a small company without having to, you know, bet the farm on any one asset. You know, cash flow is important. You know, I think if you look at how we kind of put this together, last year there was a lot of milestones we wanted to get. Getting our first cash flow royalty was definitely one of them. But, you know, we were still building it out in terms of satisfying the business plan. You know, we wanted to get exposure to all of our target commodities. You know, especially at this early stage, we wanted to do really accretive deals. So that's where you're going to see a lot of value being unlocked this year, where we got in, you know, just before they put out their PEA and everyone can kind of sense the economics, you know, but those are ones where, you know, you're paying maybe 1 million in shares like we did on a couple of our deals, but, you know, over the next 5 years, you know, you're expecting that to turn into something where you're expecting maybe 3 million US annually to start paying back to you. So those deals are very, very accretive. And so, you know, we wanted to get exposure to all of our target commodities, you know, get our first cash flow and kind of, you know, knock that out so that we have our business plan, right? Our goal is to stay diversified across all these commodities. You know, we don't want to bet where battery chemistries are going to go, what new technologies might disrupt supply. You know, we wanted to have exposure to all 9. And so we're, you know, closing in on, we just still got to knock off 10, but definitely in the cards. And then from here now, it's kind of more exciting. Now there's really going to be more about getting back to cash flow. You know, how do we kind of get to that next size? And I look at our portfolio right now. We just put our Middle Tennessee zinc royalty about 4 or 5 months ago now. Zinc prices are already up 25% since we've acquired that. And, you know, we do have an option to increase that ownership up to 50% alongside Sprott. So, you know, that would be looking at around 1.25 million a year royalty revenue once they ramp up, get over some of the COVID delays. And then we've got our Graph Mata royalty in our portfolio. You know, that was already producing for 30 months continuously, shut down, you know, because of COVID restrictions in the country of Madagascar. But they come out just, you know, in the last month, said they want to bring that back online at double the production capacity that they had previously. So, you know, it's not that hard to do really in the graphite space for kind of a modest capex. You can do that. So, you know, we're looking at that potentially starting to pay off in the middle of this year. And that could be around US 1 million a year in royalty revenue back to us. So, you know, just between that and our zinc royalty, we're kind of cash flow positive, right? So, you know, just that's nice. And then we also have our Oche lithium royalty, which is steadily advancing towards production as well. Operator Sayona Mining did complete the acquisition of the Canada Lithium Mine, which sits right next door to the Oche project. Really, the plan is to ramp up ore from that to ramp up production at the mine. And so, you know, that we could be looking at production coming in as early as, you know, kind of 2023. And again, we're looking at somewhere in the range of about US 1 million a year. So, you know, there's good eyesight just on our current portfolio to have kind of 3 royalties coming in production over the next 2 years here. Biscuit Creek could be shortly after that. There's exciting stuff going on with the operator there, Northern Graphite. But, beyond that, I think we've really got a fantastic development portfolio that, if you look 5 years out, we see our current portfolio getting to that 20 million free cash flow, just as these are progressed by third parties, right, at no cost to us.
So there's a lot going on there and a lot of information for people to digest. And I think that's possibly one of the difficult things about royalty companies is trying to understand all the different moving parts. But so just summarize for me, in terms of the near-term revenue that you're expecting in the next couple of years, what did that total up? What is
yeah, so we're on 2.5 million.
2.5 million.
If it's Creek, call it 2.5, a little bit further out, but that'd be another million on top of that.
Right.
So,
okay.
2.5, $3.5 million bucks. Yeah.
Right. Okay. And since
that's without us going out there and acquiring anything, in the interim. This is just from our current portfolio.
Well, that's where I want to go, right? Because I think you had a good start. Beginning of the year, you were sort of mid 20s. Have been as high as sort of mid 50s, and you were sort of where you were when we last spoke, around sort of high 30s, right? Nearly 40 cents, yeah. Right? So the share price at the second half of the year has been kind of flat-ish, right? You're of a certain size, you're doing deals, got some line of sight towards revenue in the next couple of years, right? And a nice number. But do you think that because the thematic is such a strong one, that the companies in that space, whether with the coppers, the nickels, the lithiums, the whatever multitude of other commodities that fit your mandate, they're going to find it easier to find money? Are they going to be rushing off to sign royalty deals with companies like you going forward? Do you expect the flow of deals to increase, decrease? I mean, how do you play it in this marketplace with the competition for money?
Yeah, well, that's a good question. I do expect that competition is going to increase. We have a lot of deal flow. Access to deal flow is not really our issue, and I know there's a lot of money out there looking to get into this space that just doesn't seem to be able to find deal flow. I think that's just a bit of a learning experience, as new money is trying to come into this space. So competition definitely is going to, rise, but royalty as an alternative financing mechanism is a fantastic financing mechanism for both the company and for investors. And so, I expect that royalties are going to come to play a bigger role, quite frankly, in financing in the sector. And I think there's that potential just because you have these kind of higher value added products on the back line. You can afford a larger royalty, in a lot of these mines. And this is, double-digit growth, right, expected across all these metals as we move forward. So there's going to be more projects out there. This really is still kind of day one, despite where prices have already jumped up, where they have. We really just started going on this whole clean energy transition. So, I think because it's royalties, there's always going to be an argument, a place for us to fit in on deals. That's one of the things I love most about it. We can fit ourselves into pretty much any deal. Whether they already have debt or equity, we're a good piece to just kind of fill around that. And so, royalties are always going to be around, I think. I'm not too worried about that. As far as us, and having deal flow, there's a lot of good opportunities. The nice thing about having 9 different target commodities, is even in a broader energy theme where it's a bull market, some of those commodities are going to fall out of favor intermittently. There's going to be mini trials between each of them. So we can kind of go back and forth, and say okay, copper's had a great run, but there'll be a time where copper gets, has its lack of love as well at some point in time. Exactly. So, that's the kind of fun part, is we can kind of bounce around between each of these different commodities, really depending on the market. And the other thing that was kind of strange, to be honest, was existing royalty holders, guys that had royalties, when those companies had all the equity in the world, so lithium, went through the roof. Guys who held existing lithium royalties were looking to sell, and they were, relatively priced. So you can kind of bounce back and forth between directly approaching these companies, approaching guys who have these royalties, and just kind of flipping through each of these commodities, whether they're kind of relative low or high in the cycle. So lots of opportunity out there.
Okay, and with regards to, and I understand that, and that makes a lot of sense to me. And I think also investors in these companies don't mind companies allocating royalties, selling royalties or NSRs on the projects at certain stages of the company's life. Less so at other stages. But I guess that therein lies a challenge for the companies involved. But for you guys, you're 30 million market cap, you've done some deals, some interesting structures, etc. But you would need to go and raise some capital to do more of these transactions. What's the landscape look like, and you feel your ability to go and actually raise capital to actually go and do deals, and if so, will your deals start looking just a little bit, well, apart from the zinc deal, but they're mostly of a certain size. They're a little bit small on the smaller size. You need to kind of up the size of these things, right?
Yeah, well, and so that kind of goes to the point. I knew we weren't going to get all the credit in the world for some of the deals we did, towards the end of the year, but those are going to be very accretive deals. I expect that everybody's going to start to understand exactly what we did as we move forward here. There's a lot of money going into those assets. We know, like the lithium space, we picked up a few great lithium royalties last year, right ahead of where economics are coming out. And we've got a very good exposure. So we know what these lithium projects should look like, how much money it's going to take to kind of get there. And so, it's our skill set really going in and getting those a bit earlier. But look, I mean, we've been very good about spending cash versus, the deal size. I mean, that zinc deal was, $17.5 million deal. Our cash cost was $250,000. A lot of our deals we've been doing are mostly shared or all shares deals where guys are excited to get our equity and gain exposure to, the rest of our portfolio as well. So it lets us kind of get a bit of a better deal, when we're negotiating things. So look, I don't think we necessarily need to raise a lot of money. Do we have the capability? That's really changing. I've had a lot of groups offer us money. For me, I don't want to do anything that's at worse terms than our last financing. So we've had equity facilities. We've had debt facilities. I've kind of said many times I don't want to take on debt, so we've got 5 or 6 different sources of cash flow. But there's now big private equity funds and groups definitely that are reaching out. Like I said, there's a lot more money that's coming to look at this space. How do we get into it? And there's very few groups out there that have kind of our experience, at this point in time, navigating all these different commodities and the royalty space, being able to put new deals together. So, it's not something that historically has been maybe a strong suit, but I think we're in the right space, we're in the right time. And I do see a lot more money kind of trying to find its way to us one way or another.
Okay, so I think you'd say you've learned along the way as well, because when you started off, we talked previously about the experience of the management team in terms of the transaction or sitting on the principal side, etc. You learned a few things along the way through doing deals, through experience. Get it. You also used a phrase that I wasn't quite sure what you mean. We don't necessarily want or need to raise capital. So what does it say about your ambition here? So I'm trying to understand, because you could kind of sit back now and go, we've got some good stuff coming up. We'll see this deliver over the next few years. You've got to do deals. You've got to keep the growth story going. So how do you fund that?
So we're going to have to do another financing here at some point in time, right, because we do want to keep up that growth.
Okay.
At the end of the day. So that's really the thing. I mean, theoretically, we could batten down the hatches right now, wait for our cash flow royalties to just, take us all the way through and sit on our portfolio. But I think that'd be really giving up our first mover advantage that we have right now, where we are picking up royalties that, I think, quite frankly, are going to be worth 5, 10 times as much, a year, 2 years, 3 years from now. That's really the only thing holding us back. I mean, we are looking at, obviously a strategic investor would be kind of a top priority, bringing in a private equity fund for not having somebody just for this, kind of top things up, but to have somebody there for bigger deals as we move forward. Looking at things like equity facilities where we have some control on when we want to draw it down, so we don't have to, dilute all up front, and can kind of manage that a bit. And if we are successful, go ahead and get a couple more producing royalties here, in the next 3 to 6 months. We would look at debt, at that point, for sure. Yeah, so minimizing.
What's the more immediate target for you? Because obviously, if I look back at the MTN zinc royalty deal, right, which you had to bring Sprott in to kind of manage the structure of the financing for, but you've kind of got to claw back your ability to kind of buy back some of that deal. Is that the priority for you, given what we're seeing with zinc prices, and obviously, they are delivering on that front? So is that number one priority for you, or is that somewhere else further down the line? It's
further down the line, in my opinion. Right now, we've still got 5 months on it. That's a lot of option value to see how things work out between now and then. And so, yeah, it's not necessarily a priority, but that will start to kind of take more center stage in the next, 3-4 months out. I would definitely start to put my attention towards that. At the end of the day, we're going to have to pay $4.5 million if we want to execute that option. That said, if we don't execute it on this year, we still have an option to do that next year. So we'll kind of play that a little bit more by year as we get to it. But no, right now we are focused on some new deals. We have time, like I said, so we'll take that time and just kind of wait and see how things work out.
Okay, so what do new deals look like in terms of its size and profile? Are you upping the game here? Do you want to deploy more capital per deal?
Well, we're looking, I try and be creative in everything that we do, because
Sure.
you can save a little bit of dilution when you're this size of company. It makes a big difference. So we are definitely looking at doing some creative transactions. But yeah, we're going to start upping the game for sure. I mean, as we get bigger, that was probably the toughest thing, is trying to stay diversified as you grow when you're only we started as a $10 million company, right? So it's very hard to find deals that that let you do that. But definitely as we start to keep growing here, I would love to double the size of our portfolio this year if we can, and so a lot of those deals, will probably be on the smaller end, but definitely we're looking at deal sizes now that were out of reach, previously over the last kind of year and a half.
But can you do that? Can you operate down at this end with the smaller deals, with obviously longer return profile and less certainty by definition, and survive? Because most shareholders of most royalty companies always ask us the same questions, which is, will the deals get bigger? Will obviously the accretive nature is, how companies define those things, and whether you're overpaying or underpaying is again defined differently by the different companies. They all seem to claim the same things. But do you think that you want and prefer to operate down here at this smaller deal size? Or have you got, again, that ambition, or do you see it as a useful thing to start doing these bigger deals? Yeah,
well, I would say, my background, I've worked on some very big deals in my time. And so, those are always exciting. I think, and the market appreciates those, right? That's what everybody gets, and they can understand size and, they got a big operator, this. And so those deals, I don't mind doing those deals. I like them. At the end of the day, I do want to get bigger sizes, and definitely shouldn't be your kind of main target, but it is important. It lets you do different things. It brings, more access to capital to really fund that growth. That said, personally, I do really love these kind of smaller end deals, and because there's a strategic imperative that you don't see in the gold space, right? When guys are going out and they're doing this in gold exploration, there's gold everywhere. There's gold up in those hills. There's gold up in those hills. When you look at our portfolio and our manganese royalty, it's the only manganese district in North America being developed for the EV space. I think there's going to be a little bit more of a strategic imperative, that deposit versus the one that doesn't exist, coming to production. So there's more strategic, I think, imperative for a lot of these. If we look at a lot of our lithium royalties in and around the only producing lithium mine in Canada, right? There's only one producing lithium mine in Canada. I don't know exactly how many gold mines, but there's a lot more than that. And so, I think there's that strategic kind of imperative that you don't see necessarily in the gold space, that you're going to see a lot more for these metals, because we need these metals. We need a lot more of them. And they don't occur everywhere. And we don't have a multitude, especially when you look at domestic sources of supply, which is, again, kind of our focus, looking at what deposits out there could supply Australia, Europe, North America, and all the plants and gigafactories that are under construction there. And so when you look at that, you might be getting in a little bit earlier, but it's the only one, so it's, so I like those because I just kind of see it as, it's a little bit kind of safer bet, because you have that, strategic part, and, it's going to be the most advanced one there. So if you're getting a little bit earlier, it's different, I would say, than just doing stuff in gold exploration, where, that stuff can sit there for a long, long time.
We're not seeing a lot of competition for you, really. And I don't know what to read into that. Do I go, they're truly contrarian and they call the market early and people haven't worked it out yet? Or people go, that's not a space I think I can do well in. So how are you reading it? Because obviously at these prices, it looks like genius if they sustain, right?
Yeah, well, look, I've been wondering myself too. And, the first thing that we actually tried when we went around to all the other royalty groups, who are sitting all the major ones. They're sitting on some royalties that, like nickel and stuff that they have no idea what they have. They have pre-feasibility stage projects and exploration, and the sense that I got was, we don't know anything about nickel. We don't want to know anything about nickel. And never mind getting into graphite, but there's not that many people in the royalty space. It's fairly big in terms of size, but when you only need 25 people to run a $25 billion company, there's not that many people out there, in the space, and primarily it's all been people focused on precious metals. So I think that's just where a lot of the experiences, a lot of that kind of knowledge. It's definitely harder, following 9 different commodities in a kind of ever-changing environment. But for me, I love that. That's where the opportunity is. We don't have a huge amount of competition right now and stuff. So pricing for us is, I kind of calculate it as about 1/10. If you look at what we paid on our portfolio to some of the prices in the precious metal space. But I know that all those guys in the precious metal space are wondering what we do next, because they're banging their head against the wall, all trying to compete over the very thin, pipeline of opportunities they have. And prices have just kind of gone through the roof. So, I expect that they're going to, they're looking around already. What do we do? I think a few more groups are going to start to, look at what we're doing and probably join in.
Well, let's see how the market pans out this year. What are the moments this year we should be looking for in 2022 from you guys?
Yeah, well, look, I think a lot of catalysts coming on our current portfolio. Last year, operators raised about $150 million to invest in our assets, most of which is actually earmarked for investment this year. So we're expecting economics to come out on our manganese deposit. I love this project. But we're expecting that'll showcase about $5 to $6 million a year in royalty revenue back to us, somewhere in the 35 to 40 year mine life, once in production. And so, that PEA sounds early, but the metallurgy is super advanced. They've been working on that for about 3.5 years. So that PEA, I think, we'll get some value. Hopefully people start to recognize what we have there. We're expecting economics to come out on 2 of our lithium assets. We picked up very cheaply last year, pre-kind of prices going up 400%. And we're expecting economics to come out where, they're showcasing again, kind of 2.5 to 3.5 million each in royalty revenue back to us once in production. The operators of those raised $40 million just in November alone. So there's a ton of money going into our assets. We've got work really coming across most of our portfolio next year. There's about 8 assets that we have major updates coming on. We're expecting Graphmata to make some progress getting back into production here over the next kind of 6-12 months. We should definitely get a more definitive timeline on when Oche should come into production in 2023 as well. And, so we're excited to see that just kind of unfold. But definitely, like I said, my goal would be to double the size of our portfolio this year. We really started to ramp up our, the deals that we started to do at the end of the year there. And so it's going to be an exciting, this will be our best year yet. And it's only 2.5 years in, but definitely a year to look forward to.